Hey everyone, it's Dan Blackwell. I wanted to shoot a quick video today and discuss 2021 market outlook here in Orange County for multifamily real estate. Multifamily weathered last year's turbulence in the marketplace very, very well. It was one of the best product types that held its value and resilient through the marketplace, second really to industrial. And we pulled information on transactions from 5 units to 100 units within Orange County to really give perspective on did multifamily hold its value, where are cap rates, etc. So here are the stats from 2019 compared to 2020. The number of transactions dropped by about 15% in 2020 when COVID hit, but the volume, dollar volume, price per units, and cap rates were all pretty much flat. Your cap rates were 4.3% on average. Your average price per unit was $275,000 a unit, and your dollar volume was about $560 million per year that cleared the marketplace. So a very, very flat type comparison from prior years, and that really shows the resiliency in multifamily and how it can handle a recession. Everyone needs a roof and shelter, and we really saw a lot of investment capital flock into multifamily despite the uncertainty, and it really had to do with the strong rent collections here in Orange County and then coupling that with phenomenal low interest rate financing. "2021 is off to a very strong start. It really didn't feel that many investors took a breather through the holidays, and we've been off and running, putting transactions together, and we anticipate a strong year here locally. And it also supports our CBRE research, which indicates a 33% increase in transaction volume on a national level for multifamily real estate. It appears that we will not be reaching the prior peak transaction volumes that we saw in 2018 and 2019. However, 2021 will be an uptick from the prior year. And then also, according to CBRE's research report, markets like Orange County are set to lead the multifamily recovery here in 2021 and outperform denser downtown centers and urban markets where we've seen a little bit more of an impact from COVID. And then also our national expectations for rent levels and employment will not reach recovery here until the latter part of 2022. The biggest things with risk within the market or why investors are selling, it's largely due to the legislation changes. And there's always that possibility there's going to be more changes coming down the way here in 21 and also potentially in 2022. And we've just seen that evolving throughout COVID. And a lot of owners are just saying, hey, you know what? California's been good to me, but I'm looking to now focus on investing out of state. I'm not ready to pay taxes yet. I want to go into other markets. We've helped a number of investors move capital out of state because of those reasons. Number one, just, for example, just SB 91 extending the statewide eviction moratorium through June. And then we're also going to do another video on that in more detail coming soon on that. But I just think a lot of people are anticipating more regulations from the state level and then just also on a tax level. A lot of folks are feeling that there could be an elimination of the 1031 exchange, but also a lot of folks feel that the capital gains is going to increase. So if they do decide to cash out, it could be better this year versus waiting and then taxes rise. What to expect in 2021 here in Orange County. As long as we have low interest rates and strong rental collections of 90% plus, we will most likely see a continued level of demand from investors and low supply in the marketplace. And that's what we've seen in 2021. There's not a whole lot of inventory in the marketplace. Good inventory that's priced well is getting absorbed quickly by the marketplace. So we've always seen Orange County to be very high demand, low supply levels, and I think that trend is going to continue throughout 2021. A couple trends to look out for here in 2021 that we wanted to share. Number one, we are going to see more money coming out of LA County moving into Orange County looking for multifamily real estate. We saw that firsthand as a team where we generated multiple offers on several assets from investors that were looking to sell a building in LA County and move it into Orange County to diversify and get out of the tighter rent restrictions and regulations. And then number two is the COVID discount. We saw a lot of folks looking for a COVID discount last year. Not a lot was given, and we've almost seen a little bit of a COVID premium on multifamily transactions that we have been putting together here in 21, and I think that trend is going to continue while interest rates stay low and there's just a scarcity of good real estate for sale. In summary, 2021 is going to be a great multifamily market for Orange County, and it's really become more or less a balanced market, although tipping more or less in the seller's favor. So if you're looking to exit out of a multifamily property, you're going to have the market working for you. And then as a buyer, there's a lot of really good things and reasons why to invest this year. And one of the most important reasons is these low interest rates. So overall, we're going to be on the forefront of the marketplace, adding value to investors. If you need anything from us, feel free to reach out to myself or anyone on the team. Thanks so much for watching this video. Feel free to like and subscribe so you get updates on a real-time basis on what we're putting out in the marketplace. And if you need anything on a one-on-one level, feel free to reach out to myself or anyone on the team. Thanks so much for watching, and we'll see you on the next one.